All right guys, how to not create uncertainty for yourself. This is a problem that most traders encounter. Trading is uncertain, of course it is. You don't know what could happen on any day, on any moment in time. But what you can do is prevent uncertainty or prevent creating your own uncertainty. And there's two ways that you can do this, or two key ways that traders create uncertainty that they don't need to create. Simple thing to do, always think about what you can control. If you can control something, then you can reduce uncertainty. Now, when you're in a trade, you don't know what other people might do. You don't know whether any news might come out, whether this is going to keep going or reverse on you. You can't control those things. What you can control is where your stop is. You can control where your target is. Now, one of the ways that traders create uncertainty for themselves is by taking on a trade and letting it run. This is a really common thing that people like to talk about. They're like, oh, just let this run and see what happens. The problem with that is as soon as you let a trade run, you are now in a position where you are exposed to uncertainty. And the problem with this is not necessarily whether this trade works or not. It's more about the psychological impact that letting a trade run happens. So if I give you a little example, say you take a trade, you enter, you get out, or you have a target. If you decide, actually, do you know what? I'm going to let this run. The problem that you now have is whatever the result of this is almost inevitably going to be a disappointment. Yes, you may end up with slightly more P&L, but there is the situation where you let it run and it comes back. Now, this feels like a loss because in your head, if this was worth 500, this target, and you now get out here and make 200, you effectively see this as a $300 loss. It's not, because you're $200 better off than you were, and if you're letting this run, naturally you're open to the uncertainty of what may or may not happen next. So that gives negative psychological impact. You'll now feel like you're owed 300 and you'll now go hunting for that. The other side of this, creating uncertainty, is that what the other aspect of this is, if you let this run and the market keeps going like that and you get out up here, well, now you look at the trade and think, I should have let this run further. This has two negative impacts. One, it encourages you on the next time you do this to hold it further. How you define further, you don't know, which is uncertain. So now you've created more uncertainty for yourself in the future. Equally, having seen this continue, you again now feel like you're owed that money because you could have stayed in. And so now the uncertainty that you've created results generally in revenge trading, but also now in trying to recoup money that you never knew you were going to earn. Whereas if you have a target, it's very clear. You know exactly what your risk is. You define your risk down here and you can say, right, this is the cost that the trade is going to, or this is what the trade is going to cost me if it goes wrong. This is what I'm going to get for it. I now have certainty. I don't know precisely whether it will work, but I know exactly what it's going to cost me if it doesn't work, and I know exactly what I'm going to get if it does. That's certainty, and they're the things you can control. So don't bring uncertainty into your trading. The other aspect of uncertainty that you can work on is how does a trade move to target? Because the other thing that people struggle with is the simple mindset of, if I buy here and my target is there, people think A to B and assume that a market moves in a dead straight line, which means that the moment it doesn't, this feels uncertain. It's not uncertain, this is the natural progression of a market. They don't always move in a straight line. So if you understand that, what you need to try and do with any individual trade is learn how it does it. Certain trades will have a typical pattern of the way they move from an entry point to a target. And if you understand the trade that you're taking, you should understand not just where you to get in and where to target, but how it typically goes there. That's really valuable, because if you understand that, it reduces uncertainty and it reduces disappointment, because what happens if you expect this and you get this, so what you think in your head as a very short period of time where we just buy and then we sell and you make your money, to something that might be 2 hours, maybe more. If you're not expecting this, this allows you to come up with all of the what ifs. What if there's news? What if somebody starts selling it? What if somebody starts buying it? What if, what if, what if? There are so many things that you could think of that could turn this against you. For as many things that will turn it against you, there's as many things that could make it go right for you. So the uncontrollable things that you cannot exhaustively define are just as likely to push this for you as they are against. So don't get concerned with those types of things. Understand the trade for what it is. As long as it looks like what you think it is, keep that in mind, keep that trade. Of course, if you do get a piece of news and you're up here and the news is negative, well, you can get out of the trade. Get out. Things have changed. But unless anything changes, you stay in. But that all comes down to creating that certainty of knowing how the market's going to move from one point to another. That massively reduces uncertainty. That's what allows people to take trades on, sit through them, because they've reduced uncertainty. They've created certainty in the things that they control. That is critical. I'll leave you with that one. Nice short one there, guys. But one well worth having a look at. I'll be doing a few more of these kind of psychology type YouTubes in the future weeks, but also we are running workshop at the minute. Come and join that. Next one, 2nd of September. So I'll see you there. Go to the link elitetraderworkshop.com/performance or follow the link just below and you can come join us there. I'll see you there, or I'll see you on one more of these in the future. Catch you soon.